The winter always comes quietly. There is no siren, no announcement, no single candle on the chart that screams, "This is it." It starts with silence. The group chats that used to explode with screenshots of green candles suddenly go quiet. Twitter timelines slow down. You stop checking prices every 5 minutes, then every hour, then sometimes not at all. And one morning, you realize something has shifted, not just in the market, but inside you. Crypto winter doesn't arrive with fear, it arrives with emptiness. I still remember the first time I truly felt it. Not the first drawdown, not the first losing streak, but the moment when hope itself felt expensive, when even optimism seemed like a bad trade. Back then, the charts were red for weeks. Not violent red, just heavy. Every bounce got sold, every rally faded. Projects I once believed in stopped updating. Influencers disappeared. The confident voices turned cautious, then quiet. And that was when the blood really started to show. Because crypto winter is not about price. It's about what happens to people when the market stops rewarding belief. I still remember sitting alone late one night, charts open, coffee cold, realizing that for the first time in years, nothing looked obvious anymore. No clean trends, no easy setups, just uncertainty. And instead of panic, something else appeared: clarity. Because when the noise fades, patterns become visible. When liquidity dries up, behavior reveals itself. When price stops moving, psychology takes center stage. That was the moment I understood something most people only learn after they're wiped out. Winter doesn't destroy traders, it reveals them. And if you're still here, watching this, chances are part of you already knows that something is wrong, that this phase of the market feels different, heavier, slower, more unforgiving. The question isn't whether crypto winter is real. The real question is this: are you prepared to survive it, or are you still trading like it's summer? There's a specific kind of pain that only appears in winter. It's not the sharp pain of a sudden crash. It's slower, quieter, more corrosive. It's the pain of realizing that the rules you thought you understood no longer apply. I've seen traders blow up, not because they were reckless, but because they kept trading aggressively in an environment that no longer rewarded aggression. Strategies that printed money in bull markets slowly bled accounts dry. Breakouts failed. Momentum died mid-move. Even perfect setups started to feel cursed. And the most dangerous mistake crept in, almost unnoticed: overtrading. When volatility disappears, traders try to manufacture action. They lower their standards, they force entries, they convince themselves that doing something is better than doing nothing. It never is. I've watched good traders slowly lose confidence because their edge stopped working. Not because the edge was bad, but because it was designed for a different season. And instead of adapting, they questioned themselves. That's the cruelty of winter. It doesn't scream at you, it whispers doubt until you break. Another mistake follows close behind: leverage. In bull markets, leverage feels like efficiency. In winter, it becomes a silent executioner. Small ranges combined with impatience create a perfect storm. Tight stops, repeated losses, emotional fatigue. One day you wake up and realize your account didn't die in one trade, it died in 100 small ones. But the deepest pain is not financial, it's existential. Winter forces you to confront why you're here in the first place. Were you trading because you loved the process, or because the market made you feel special? Were you building skill or chasing validation? I remember a stretch of months where nothing worked. No clean trends, no conviction, just long hours and flat results. And I caught myself thinking something dangerous. Maybe I was never good. Maybe it was just the bull market. That thought has ended more trading careers than any liquidation ever could. And then came the realization. Not in a dramatic moment, not with a breakthrough trade, but with acceptance. The market wasn't broken. I wasn't broken. I was simply trading the wrong way for the wrong season. That was the shift. Winter is not a time for expansion. It is a time for contraction. Less trading, more observation, fewer opinions, deeper thinking. I stopped asking, how do I make money right now? And started asking, what is the market rewarding and what is it punishing? And the answer was clear. Winter rewards patience. It punishes urgency. It rewards liquidity awareness. It punishes leverage. It rewards those who survive quietly while others disappear loudly. That's when you begin to see the real structure of the market, not the flashy moves, but the slow accumulation, not the headlines, but the positioning underneath, not the hype, but the hands that are still active when everyone else is gone. Crypto winter is where professionals are formed, not because they make the most money, but because they stop losing it. And that is the moment everything changes. Because once you accept that winter is not meant to be conquered, only endured, your behavior shifts. You trade less. You think more. You stop chasing and start watching. And slowly, without fireworks, without celebration, something returns. Confidence. Not the loud kind, the quiet kind. The kind that doesn't need the market to move to feel okay.
Every winter exposes the same illusion, that markets are driven by stories. They are not. Stories are what retail trades. Liquidity is what the market actually responds to. In bull markets, liquidity is everywhere. New money flows in daily, price can move recklessly because there is always someone willing to buy higher. Mistakes are forgiven. Poor risk management survives. Even bad ideas can look brilliant. Winter removes that safety net. When liquidity dries up, price stops responding to narratives. It responds only to positioning, inventory, and risk transfer. This is where most retail traders get lost, because they are still trading stories in a market that has moved on. Smart money understands something retail rarely does. Markets don't move to reward belief. They move to rebalance exposure. In crypto winter, large players are not looking for explosive upside. They are looking for asymmetric positioning with minimal risk. Their objective is not excitement, it's survival, accumulation, and optionality. This is why price behaves differently. Rallies are sold quickly. Breakouts fail. Support levels feel meaningless. Not because the market is rigged, but because liquidity conditions have changed. There simply isn't enough demand to sustain directional moves. Retail interprets this as manipulation. Smart money interprets it as inventory management. Let's take a real example. After the 2022 collapse, Luna, Celsius, FTX, Bitcoin didn't collapse endlessly. It entered a prolonged range. To retail, it felt like nothing was happening. To institutions, it was everything. On-chain data showed something important during that period. While price remained compressed, long-term holders were quietly accumulating. Exchange balances steadily declined. Volatility dropped. Attention vanished. This is not accidental. When volatility is low and interest is gone, risk is cheapest. That's when capital with patience steps in. Retail, meanwhile, was still looking for confirmation, waiting for news, waiting for narratives to return, waiting for permission to believe again. Smart money doesn't wait for belief. They position before belief becomes necessary. Another truth winter reveals is this. Most traders don't actually have an edge. They have timing luck. In high volatility environments, randomness can feel like skill. In low volatility environments, randomness gets exposed. Edges must be precise. execution must be clean, risk must be controlled. This is why winter is brutal. It doesn't reward effort, it rewards accuracy. Smart money adapts by shrinking size, extending time horizons, and focusing on context rather than signals. They care less about entries and more about exposure, less about prediction and more about survival. Retail does the opposite. They increase leverage to compensate for smaller moves. They trade more to chase stimulation. They mistake activity for progress. This is where accounts quietly die, not from one bad trade, but from misunderstanding the season. Crypto winter is a liquidity regime, and regimes don't care about your opinions. They care about positioning. If you understand that, everything changes. You stop asking when the next bull market starts. You start asking where risk is cheapest. You stop trying to be right. You start trying to stay solvent. You stop chasing momentum. You start observing behavior. And that's the real insight winter gives you. Not a setup, not a signal, but a lens. A way to see the market as it is, not as you wish it to be.
If winter has taught me anything over the years, it's this. Survival is not passive. It is deliberate. Most traders think surviving winter means not trading. That's only half true. What winter actually demands is a different relationship with the market, one that values restraint over reaction, clarity over excitement. The first shift is learning to reduce exposure without reducing attention. You don't need to be fully invested to stay engaged. In fact, winter punishes those who confuse participation with commitment. Keeping smaller positions or even staying flat for extended periods is not a failure of courage. It's an expression of understanding. Capital preserved in winter has more power than capital earned in summer. The second shift is redefining what progress looks like. In winter, progress is not measured in profits, it's measured in mistakes avoided, in days where you didn't overtrade, in weeks where you followed your rules even when nothing happened, in moments where you chose patience over impulse. Most traders never experience this kind of growth because it doesn't feel rewarding in real time. There's no dopamine, no validation, just quiet discipline. And yet, this is where real edges are built. The third shift is internal. Winter forces you to confront your identity as a trader. If your confidence depends on market movement, winter will break you. But if your confidence is rooted in process, in preparation, observation, and risk control, winter strengthens you. This is why seasoned traders often say the same thing in different words. Bull markets make money. Bear markets make traders. Not because winter is kind, but because it is honest. It shows you exactly where you were relying on luck, exactly where you were chasing instead of waiting, exactly where you confused noise for signal. And if you're willing to listen, it teaches you how to move differently. By the time spring returns, winter-trained traders don't need confirmation. They've already done the work. Their risk is defined. Their expectations are realistic. Their patience has been tested. They don't rush. They recognize accumulation before excitement. They see positioning before narratives. They understand that markets don't turn when everyone feels hopeful. They turn when despair is fully priced in. That's the quiet advantage winter gives you. So if the market feels slow right now, heavy, uninspiring, that's not a sign to leave. It's an invitation to stop trading for stimulation and start trading for longevity, to stop chasing outcomes and start refining behavior, to stop asking when the next bull run begins and start preparing for it properly. Because when the market finally changes, and it always does, it won't wait for those who needed certainty. It will reward those who learned to move in uncertainty. If this resonated with you, if you've felt the weight of this market and recognized yourself in these moments, then you're already further along than you think. This channel exists for traders like you, not to promise shortcuts, not to sell fantasies, but to walk through the parts of this journey most people skip. If you want to keep going, if you want to understand markets not just when they're exciting, but when they're honest, then stay with us. Subscribe to Staro Trading. Share this with someone who's struggling quietly, and leave a comment telling me what winter has taught you so far. Because mastering the market always starts the same way, by understanding yourself. Master yourself, master the markets.